How's that? Are we back? Does that sound good? If you just let me know quickly if we're good on that, and we'll get started. I think I got it back. It's the joys of people messing with my sound master thing here over the weekend. All right. Anyway, good morning, everybody. Happy Monday. Serge Berger here from thesteadytrader.com. What we're going to do here for the next 10 to 15 minutes is go through the top few things on my notepad. If you are here for the first time, please make sure you subscribe to the channel. That really helps us out, helps you out a lot because you're able to get updated in real time when we go live with things, with analysis. And also, please hit the thumbs up like button. Again, would much appreciate that. All right, so we're going to spend the next few minutes going through some top things here. First of all, before we even look at anything more specifically, let me quickly give you the sort of the rundown. We've got a whole bunch of things today to walk through. First of all, I do want to talk a little bit about Bitcoin, the move over the weekend, which I'll show you. I made a quick video on that. You can watch that on YouTube as well. Obviously, we'll address the debt downgrade, give people some perspective on that. There's a video that I put up on YouTube as well. I'll do a lot of YouTube shorts. You guys would be well advised to watch those because that's a way to get updated in real time. We'll talk about United Health, which is actually the setup you're seeing here on your screen right now with our Vertical X Pro indicator. And then I have a couple of words on Walmart, and that'll be a good amount of stuff to go through here. So first of all, let me point out a couple things. If you haven't yet done so, when you go to our channel, there's a little button there called YouTube Shorts. It's just called Shorts. So for example, yesterday on Sunday, I made a real-time video that talks about the debt downgrade and kind of what I'm watching. I'm going to go over that with you guys right now. But that's another reason why you want to subscribe to the channel, so you get this stuff like popped up to you guys in real time. Same thing, literally just a few minutes ago, I uploaded an update on what's been going on with the Bitcoin move over the weekend, and so that's going to be something I'm going to update you guys as well, and I've made a little video there. So if you follow the channel, then you'll be able to get these YouTube shorts as well. So I'm going to do a lot of those going forward because I think they're very helpful. So let me get started with the point on Bitcoin, and then we'll move on to United Health, then the broader market, and so on and so forth. So let me quickly get started with that here right now. Let me check one more thing. All right. Okay, very good. All right, so let's talk a little bit about there's been a wild ride in Bitcoin over the past 15 hours or whatever it's been. I created a chart here. This is just using our trender momentum indicator. And for those of you guys using the trender, you know how awesome it is. I just want to quickly show you what's going on here. I'm going to make this a bit smaller down here. So this is just a very simple 5-minute chart of Bitcoin, meaning each one of these bars is 5 minutes. And you can see yesterday towards the sort of midday or so, we saw a big rally in Bitcoin, and we received a buy signal and it reached profit target number 1. Then we received a sell signal and it reached a free profit target, which is this green zone. And then early this morning, we got a buy signal, didn't really go anywhere, and we're currently in a sell signal. So it's been a really wild ride for Bitcoin over the past, again, 12 or so hours. I'm going to quickly show it to you here. I'm not entirely sure what to make of it because we did have this run towards more or less fresh all-time highs and then a pullback. I'm going to argue a lot of this is more algorithmically based. I reached out to a friend of mine who runs basically an options market maker firm on Bitcoin, and he didn't really have any specific insight into it either. My strong hunch is that there was someone in the Middle East or in Asia yesterday that did a big trade, and then they took profits and took the whole market back down. But Bitcoin's still holding up really well. If you have the Bitcoin bracket, you'll receive that email in a couple of hours with an update. But Bitcoin remains long-term in a bullish trend, and also even in the short term, it remains in bullish momentum. So that's kind of where we are. All right, so that's number one. The second thing, and again, this is why it's important that you guys go watch these YouTube short videos, because it's all there for you in real time when I update these things. But let's talk a little bit about the debt downgrade, okay? So I don't want to make this a too long a story, because I know a lot of people typically don't really care, but it is important, right? So essentially, when we talk about this debt downgrade, this is nothing new, right? So Fitch and S&P had already downgraded the U.S.'s credit rating. So this is nothing new. I used to talk to the rating agencies a lot, when I was on the sell side, and they're always going to be behind the curve. So that's not to say anything bad about them. It's just how it is. It's not necessarily to be their job to even be ahead of the curve. What you're looking at here is the 30-year bond yield, and you can see we're more or less right at 5% this morning. Again, if you go watch that video or that YouTube short that I made yesterday, then you'll see that me talk about that yesterday in real time, right? So basically, I don't think the equity market has a huge problem unless at this point we get some sort of tariff news or whatever, or again, the credit markets or the debt markets actually in this situation are going to start acting up. And the 30-year really has the sort of the 5% is the line in the sand. For the 10 years, about 4.5%, 4.6%. And we're right at that level. And just so you know, right clockwork, we're already seeing people this morning out of the White House defending all sorts of stuff and making sure the bond market doesn't freak out. So this is happening literally right this second in real time and over the past 20 minutes or so. So they're watching this very closely, make no mistake about it, but it's not a problem until it's a real problem, right? So I think that's kind of the thing. For the equity market, you need to see 10-year yield, 30-year yields hold above 5%. Other than that, the equity market, from that news doesn't really have a huge spillover effect, at least not as of right now. So I think that's that. In terms of equity levels, the S&P is where it is. We talked about the overhead. That's the SOX SPX. There you go. We talked about the overhead resistance zone. It's the trapped buyers zone. Clearly, we've overshot. Honestly, not that surprising anymore at this point. The algos take over and things take on, their own sort of their own life. What I think is important to understand about equities here is when you're trading at a 22 forward multiple, the forward returns on a multi-year basis are very limited, right? So if for those of you guys that are now just getting bullish again, you need to understand that this is not a cheap market. It doesn't mean the market has to drop 30%, but we're probably in a multi-year trading range. This is my base case, and it's been the base case for a couple of years now. I was certainly a year early, but now we're squarely in that situation. So the S&P is likely going to make, low to mid single digit returns over the next 5 to 10 years. And that's sort of a multi-year time frame. So if you're hoping and praying and thinking that the S&P is just going to skyhook another 20% higher every day for the next number of years, mathematically there's almost no chance of that. In fact, there probably is zero chance of that. So that's kind of what you need to think about. From a trading perspective, we're just once again at the very, very upper end of the trading range. And I personally have no interest being long here. We got out of most, if not all, the longs, I think, in early May, coming into early May, somewhere around that point. Clearly too early. Market squeeze higher. Algos are in charge. Retail investors get excited about buying call options. And that's typically when things begin to stall. So we're kind of in this wait and see mode right now. So that's as far as the debt downgrade is concerned. That's as far as the S&P is concerned. Equities. I also will tell you that this morning we're dealing with a huge options expiration hangover. We had about $1.3 trillion worth of equity options expire on Friday. So you're going to see a lot of choppiness this morning. So I would encourage everyone to be very patient this morning, because the price action might be quite meaningless unless we get, of course, news that's beyond the normal sort of news flow that we would get. Which gets us to the third, or maybe it's the fourth point at this juncture, and that's United Health. We talked about United Health all of last week for good reason, and I talked about, and we're going to continue with this. I think there's an actual specific trait that we may want to put on. We'll send you guys a trade alert on it if we do. This is our vertical X Pro indicator, and what the vertical X Pro indicator does is it gives us extreme overbought and extreme oversold readings. So what you're looking at here is a daily chart of United Health, and you can see that the stock got very overbought like about a year ago, a little bit less, and then it basically trotted sideways and then of course collapsed. Now we've got an extreme oversold situation. So basically the way the vertical X Pro works is that we're at a junction now where we're saying the stock doesn't have to skyhook higher immediately, but the probabilities of the stock consolidating here, which could happen, which means the stock could go higher, to some extent. The stock could go sideways. That would also constitute consolidation. Or the stock could even go somewhat lower, but probably won't find new fresh downside momentum unless like catastrophic news comes out, which is always possible, but it's less likely at this point, given what the indicator is telling us. And so essentially, this signal became valid as of the end of the day of Friday. We're here, of course, Monday morning. And so you can see what the indicator did. And what it does is it warned us on the 13th of May that the stock is starting to get oversold. So basically what it said is like, hey, Serge, this is last Tuesday. Be careful, this stock is hot potato. It's not yet done going down, right? Most likely. It told me the same story last week, Wednesday. And remember, we narrated you guys through this live last week. Told me the same story Thursday morning, right? And then finally Friday morning, not only is there no longer an arrow. Let me zoom in. We also had an up day of about 6% on Friday. So to me, the setup is complete. It sets up for putting on a trade where we want to be able to take advantage of the stock now going into a consolidation phase, which means the stock might go higher, it might just go sideways, it may go lower. That's what I consider to be personally a good probability setup. And typically we like to do an options credit spread in a situation like this. More aggressive traders might just buy the stock or something like that. Here may do a directional trade, but this stock's have been under a lot of pressure. So I'm going to imagine that a consolidation phase here, sideways to higher, is kind of the most likely outcome. Lastly, we have more retailers reporting earnings this week, and I'll quickly just bring up the chart of Walmart just for those people that like to look at a chart as I reference something. I don't have a whole lot to read here into this. What I will say is that Walmart and the retailers basically have two scenarios here. Either if they pass on the costs of higher input costs, which is my base case scenario, they are going to see margin pressures, which would be something that should pressure the stocks at least to some extent. Okay, so those are the two scenarios the retailers have. Either pass on the higher cost to eat the higher costs of the input costs, which would pressure margin on the corporate level. Stock will be probably limited on the upside. Maybe it goes down, that kind of thing. And then the second option is pass it on to the consumer. The consumer gets pissed off, but more importantly, inflation ticks back higher. Now, obviously, a big input of inflation is oil and energy costs, but consumer goods are an input, right? And that's the one that a lot of people don't really like to see, aside from of course higher oil prices. So I'm going to quickly show you this. If you look at the 5-year break-even rate, you can see that inflation is once again ticking higher, regardless of what people are saying. It is factually pushing higher again, and I think if we were to see retailers pass on the higher input costs, that would not help. It also doesn't help consumer confidence. So those are some of the bigger things that we are looking at here. And that is about all I have here this morning. It's actually a lot. Sorry for the audio issues. Again, if you haven't yet watched a bit more of a live update that I did on yesterday, Sunday, on the US debt downgrade, go watch that on YouTube. And the sort of the Bitcoin 12 hour recap is there as well. We currently, as we're speaking right now, actually have a sell short signal, if you will, in Bitcoin on the very, very near term 5-minute chart. I would expect Bitcoin to turn higher again here before long, but we'll follow the signal. So anyway, that's a wrap for me here this morning. I hope this was helpful. Again, please subscribe to the channel. Obviously, it's free. And give us a thumbs up, like, and we'll see you back here tomorrow morning. And members, we'll see you guys over in the Trade Ops members area in about 10